My name is John Hebert. Welcome back. Today I'm going to talk about where we're at with the market. We've had quite a year. From peak to trough, the market fell 34%. It's recovered about half of that. For the past 2 weeks, it's gone sideways. So what's next? Well, the first thing we need to remember is we're not out of the woods yet. A lot of people are unemployed. Businesses have seen a substantial drop off in business. And some businesses, some industries are really struggling. They're not going to come back in a month or 2 months or 3 months. It'll take longer. So this is what the market is struggling with now. How much good news has been baked into the recovery? How much bad news do we not know? On the plus side, there is a frantic amount of research and development into a vaccine and also into an antibody testing kits so that the population can know whether or not they're coming in contact with people who are symptomatic or asymptomatic, who've had the disease, who haven't had the disease, so that you have less spreading of the coronavirus. On the other hand, the bad news is that we are still seeing increases in unemployment. We also see that oil prices have cratered, and a lot of companies that are going out of business will not come back. There's going to be consolidation, which is typical of a recession. We are in a recession. We're going to be in a recession for a little while. Markets generally look 6 to 9 months ahead. So it's not recording the fact that we're in a recession now. It already knows that. What it doesn't know is what the market will be like, the economy will be like in 6 to 9 months. In 6 to 9 months, the optimistic view is that most people have returned to work. Those that weren't returning to work in the same job will find new ones. And the economy is receiving a lot of fiscal and monetary injection, both from Congress and administration as well as the Federal Reserve. This is unprecedented. Since this coronavirus crisis began, between the Federal Reserve and the federal government, there has been an injection of about $9 trillion into the economy. That's a lot of money sloshing around in there, waiting to get circulated. So there has been a loosening of standards on the part of the Fed in terms of buying bonds so that the money stays in the economy and then it gets used to reinvest in the economy. The concern in the long run will be whether this will create inflation, whether it will create a devaluation in the currency. Also, what we don't know is what is the trade ramifications with China. Many blame China for the spread of the coronavirus and the failure to act proactively to alert the rest of the world. So in sum, where we are now is in a period where we are absorbing information going forward that is less certain and as the timetable is less clear. As we get some clarity, which we always do, markets like clarity. They hate uncertainty. And as you get more certainty in terms of the full impact of the coronavirus, how much more we are going to have to adjust our living standards as well as our workplace in dealing with the virus, the more the market will continue its path to recovery. Bear in mind, we could see a retracement of the gains. We can pull back. That is not uncommon. In fact, I expect that to happen. If it does, I have to see and make sure that you are prepared for that and also that you're willing to live with the pullback, or do you want to raise your cash levels? We will be talking about this in the future. My name is John Hebert. Have a good weekend. Thank you.